For billionaires, parking money in a regular bank account isn't just boring, it's a missed opportunity. The ultra-wealthy think beyond savings and checking. They play a whole different game. In this video, we're breaking down why billionaires avoid traditional banks and how they grow wealth through alternative assets, private lending, and custom financial networks the average person rarely sees. Before we dive into the high-level money moves, be sure to like, subscribe, and tap that notification bell so you never miss a look behind the curtain of elite wealth strategies. Let's unlock the billionaire playbook. FDIC insurance limitations make traditional banks risky. The most fundamental reason billionaires avoid regular banks is simple math. FDIC insurance only covers up to $250,000 per deposit per bank. For someone worth billions, this protection is essentially meaningless. If a billionaire deposited just $100 million in a traditional bank and that institution failed, they'd lose over $99 million instantly. This isn't theoretical risk management, it's basic financial survival. Consider this: if you're worth $50 billion like Elon Musk, putting even 1% of your wealth in a regular bank would mean risking massive uninsured losses. Traditional banks simply cannot provide the security guarantees that ultra-wealthy individuals require. Instead, billionaires spread their assets across multiple specialized institutions, private banks, and alternative vehicles that offer much stronger protection mechanisms. Private banking offers personalized wealth management. Private banks cater specifically to ultra-high net worth individuals, offering services that regular banks simply cannot match. These institutions typically require minimum deposits of $1 million to $25 million, creating an exclusive environment where billionaires receive dedicated relationship managers, customized investment strategies, and access to deals unavailable to ordinary customers. Private banks like Goldman Sachs Private Wealth Management, JP Morgan Private Bank, and UBS provide comprehensive family office services. They handle everything from tax optimization and estate planning to art collection management and philanthropic giving strategies. These banks essentially become financial partners rather than simple service providers, offering expertise in complex areas like cross-border taxation, regulatory compliance, and multi-generational wealth transfer. The level of personalization is extraordinary. Private bankers often have decades of experience managing billionaire portfolios and understand the unique challenges of preserving and growing massive wealth. They provide access to exclusive investment opportunities, private equity deals, and hedge fund partnerships that aren't available through traditional banking channels. Alternative assets provide superior returns and diversification. Billionaires understand that traditional savings accounts and certificates of deposit offer returns that barely keep pace with inflation. Instead, they heavily invest in alternative assets that provide both higher returns and protection against market volatility. These include private equity, hedge funds, real estate investments, commodities, art, and even cryptocurrency. Private equity investments allow billionaires to buy entire companies, restructure them, and potentially earn returns of 15 to 25% annually. Hedge funds use sophisticated strategies like short selling, derivatives trading, and arbitrage to generate profits regardless of market conditions. Real estate investments, particularly in commercial properties and development projects, provide both steady income and long-term appreciation. Art and collectibles serve as both passion investments and inflation hedges. Billionaires like Steve Cohen and Leon Black have built art collections worth hundreds of millions, combining personal enjoyment with asset appreciation. These alternative investments also provide tax advantages through depreciation, capital gains treatment, and various legal structures that minimize tax obligations. Private lending offers direct control and higher yields. Rather than depositing money in banks that lend it out at low interest rates, billionaires often engage in direct private lending. This approach allows them to cut out the middleman and earn significantly higher returns while maintaining control over their lending decisions. Private lending can include everything from real estate development loans to corporate bridge financing. Private lending typically offers returns of 8 to 15% annually, compared to traditional bank savings rates of 1 to 2%. Billionaires can choose specific projects or companies to fund, conduct their own due diligence, and negotiate terms directly. This direct control reduces counterparty risk and allows for more sophisticated risk management strategies. Family offices provide institutional-level financial management. Most billionaires establish family offices, private organizations that manage their entire financial ecosystem. Single-family offices serve one ultra-wealthy family, while multi-family offices serve several families, with combined assets typically exceeding $100 million. These offices essentially replace traditional banking relationships with institutional-level expertise and resources. Family offices employ teams of investment professionals, tax specialists, estate planning attorneys, and risk management experts. They have direct relationships with hedge fund managers, private equity firms, and institutional investment platforms that individual investors cannot access. This creates a completely different financial ecosystem that operates independently of traditional banking. Regulatory advantages and tax optimization strategies. Billionaires structure their finances to minimize regulatory oversight and maximize tax efficiency. Traditional banks operate under strict regulations that require extensive reporting and compliance measures. Private banking relationships and alternative investment structures often provide more privacy and flexibility in financial planning. Offshore banking, legal trust structures, and international investment vehicles allow billionaires to optimize their tax situations legally while maintaining privacy. These strategies require sophisticated planning and ongoing management that traditional banks simply cannot provide. Private banks and family offices specialize in navigating complex international tax laws and regulatory requirements. Access to exclusive investment opportunities. The ultra-wealthy have access to investment opportunities that are literally unavailable to ordinary bank customers. These include pre-IPO investments, private placement offerings, commodity trading, and international development projects. Traditional banks cannot offer these opportunities due to regulatory restrictions and minimum investment requirements. Private banks and family offices maintain relationships with venture capital firms, private equity funds, and institutional investors that provide access to these exclusive deals. Billionaires can invest in companies years before they go public, participate in real estate development projects, and even finance government infrastructure projects in developing countries. And that's why billionaires skip the regular banks, instead choosing assets that generate income, appreciate over time, and give them control most institutions never could. If this opened your eyes to how the ultra-wealthy really manage money, smash that like button, drop your thoughts in the comments, and subscribe for more breakdowns of high-level financial strategies. Make sure that notification bell is on, because understanding how the 1% think is the first step to leveling up your own money game. Until next time, think big, stay informed, and build wealth like it's your business, because it is.